It is my distinct pleasure to welcome each of you to the handing over ceremony that marks the change in chairmanship of the Monetary Council of the Eastern Caribbean Central Bank. The Monetary Council comprises the ministers of finance of each of our member countries, and it is the highest decision-making body of the Eastern Caribbean Central Bank. It is our time-honored tradition in every July to rotate the chairmanship of the Monetary Council, and we do so today. Today, the chairmanship of the Monetary Council passes from the council member for St. Vincent and the Grenadines, the Honorable Camilo Gonzalez, to the Premier of Anguilla, the Honorable Ellis Lorenzo Webster. I wish to thank the Honorable Camilo Gonzalez, outgoing chairman in absentia, for his commitment and stewardship in what has been another challenging year for our currency union. Now, during his tenure, the council made several important decisions that supported monetary and financial stability and advanced both our legislative and transformation agenda. Article 7.2 of the ECCB agreement states, and I quote, "The council shall meet not less than twice each year to receive from the governor the bank's report on monetary and credit conditions and to provide directives and guidelines on matters of monetary and credit policy to the bank and for such purposes as are prescribed under this agreement," end of quote. So we have a statutory duty which we are fulfilling today. Today, I confirm that our EC dollar remains strong, with a current backing approaching 97%. This is up from 92% 1 year ago. The statutory requirement, for those of you who do not know, is 60%. That's what the law requires of us. We are at 97%. And our current reserves total $5.2 billion. Ladies and gentlemen, the shocks keep coming. Our planet is again on pace to experience the hottest year on record. According to the Copernicus Climate Change Service, the global average temperature for the past 12 months was 1.64 degrees Celsius above the 1850 to 1900 pre-industrial average. Moreover, in each of these months, the months have been 1.5 degrees Celsius at least warmer than pre-industrial average. If you're feeling the heat, I want to confirm by the numbers, the heat is truly on, and we're all feeling it. On the 1st of July, several of our Fair Isles were pummeled by a major storm, Hurricane Beryl, leaving in its wake a trail of death, devastation, and disruption of livelihoods in our member countries of Grenada and St. Vincent and the Grenadines. We again express our sympathy and strong solidarity for affected members. And at this moment in time, I will ask us all to please stand and recognize those who we lost and those who are now seeking to rebuild their lives. A moment of silence, please. Thank you. We reiterate our commitment to supporting Grenada and St. Vincent and Grenadines in their relief and recovery efforts. In this regard, I'm pleased that our board and Monetary Council swiftly approved a grant of $1 million each for Grenada and St. Vincent and the Grenadines to assist them with their relief efforts. Of necessity, each of us must commit ourselves to a relentless and lifelong pursuit of building resilience in our countries and currency union. As I have previously averred, resilience is a capacity to withstand and absorb shocks and not bounce back, but bounce forward. I want to repeat, bounce forward. Our Resilience Toolkit will evolve and expand, but at this critical juncture should include the following: a growth mindset that allows us to build back better and bounce forward. Fiscal buffers that we can tap, especially in times of emergency. Financial protection including the catastrophe risk insurance offered by the Caribbean Catastrophe Risk Insurance Facility, which is going to pay out or has paid out around $75 million as a result of Hurricane Beryl. Climate adaptation to harden our physical and digital infrastructure, and psychosocial counseling and support to strengthen our coping capacities after these disasters. And trust me, I speak from experience, Hurricane Ivan 20 years ago, when I was then the Financial Secretary in Grenada. The Monetary Council convenes at a time of heightened uncertainty for the global economy. Real growth is now projected at 3.2% for 2024 and 2025. The global economy is growing, albeit at a slower pace than pre-pandemic levels. But it has shown resilience, and the risk of recession has receded. Inflation continues to fall and is converging to targets, albeit not fast enough. In the case of the United States, our major trading partner, that target is 2%, and today inflation is now around 2.6%, down from 7% a year ago. The last mile is proving slow and difficult, but the downward trend is expected to continue. Risks to the global economy include geopolitical events, climatic events and natural disasters, cyber threats and attacks, as well as the high indebtedness of both the public and private sectors, all of which can undermine financial stability and economic growth. What does all of this mean for our currency union? Well, our projection for this year, pre-Hurricane Beryl, I should add, was 5%, with another 5% next year, powered by tourism, construction, and of course, helped by improved air connectivity. These projections will now be revised after the macro socioeconomic assessments are completed in Grenada and St. Vincent and the Grenadines. We anticipate that growth this year will probably be lower, but certainly will be higher next year as reconstruction gains momentum. In respect of inflation in the currency union, it has declined sharply from 9.5% in 2022 to 2.2% in 2023 and continues to moderate. As of March of this year, inflation was now down to around 1.9%, and it will largely track what we see in the US because the US is our major trading partner. Credit to businesses grew by 5.8% last year, while credit to households grew by 2.4% over the same period. Credit is projected to grow by 3.8% this year. Asset quality, specifically non-performing loans, has slightly improved from 11.2% in 2023 to 10.2% as of March 2024. However, non-performing loans, NPLs, remain uncomfortably high and will be adversely impacted by Hurricane Beryl. And for those of you who don't know, we like to see NPLs under 5%. So we are double where we need to be, and that's a source of concern. Now, ladies and gentlemen, we are convening this meeting in Anguilla, shortly titled AI, Artificial Intelligence. I therefore could not resist making a passing comment on the phenomenon that is artificial intelligence. The current revenue windfall accruing to the coffers of Anguilla's treasury as a result of the AI web domain fees is most welcome, and long may it continue. And as I landed and saw the airport expansion, I was thrilled because that revenue is funding part of that expansion. AI holds much promise to accelerate the transformation of our region and could propel our big push in fundamental and far-reaching ways. In the financial sector, these include enhancing customer verification and fraud detection, forecasting, payments, financial regulation, and cyber resilience. Notably, it could help with the trend of de-risking from which our region has suffered, as correspondent banks have withdrawn services claiming that the risk of money laundering and terrorist financing, as well as possible fines and penalties, outweigh the returns. But AI which will help manage these risks, also creates its own risks, such as worker displacement and cyber security threats. As a region, it is imperative that we answer the question, what do we want from AI? What do we want from artificial intelligence? For example, do we want a pro-worker AI or an anti-worker AI? We must make a conscious choice, because at this moment, the designs and default will be anti-worker. It doesn't have to be, but that has to be a conscious choice by us, and we have to insist on a particular design for our region. And that is within our gift, but we must seize it. In answering this question, we ought to think about some of our most pressing development challenges, such as climate change, crime, chronic diseases, as well as the need to promote cybersecurity and financial literacy, just to name a few. Before I move on, I want to issue a word of caution. AI is only possible because of large reservoirs of data, structured and unstructured, and phenomenal computing power. In short, AI needs data, lots of it. This is an issue of perennial struggle for our region, and we will need to address the issues of data collection, storage, and data governance with some urgency if we are to truly benefit from this phenomenal technology. In this regard, I wish to commend the UWI, University of the West Indies, Five Islands campus for its inaugural AI Research Conference last week, and Prime Minister Brown for his vision for the campus and for digital transformation. And by the way, I saw a couple of representatives from the Anguilla Robotics Association at that AI conference last week. Yo, they're right here. Very good. I say to our youth, there are tremendous employment and income opportunities from this emerging area, but you have to be skilled to seize it. And I'm looking now at Valley Primary students in particular, but everyone who's hearing me, and in fact parents as well, because you need to advise your children. The ECCB right now is actively seeking data analysts and data scientists to help us transform the way we work and to better deliver our mandates. I am pleased to note that the ECCB has committed to train 500 of our students in AI, generative AI, and Python over the next 5 years, starting this year. Our summer camp commenced on July 8th and will run for 1 month. This is yet another demonstration of our practical commitment to support our youth and our region's transformation. Now, before I conclude, I wish to briefly mention some of our immediate priorities. They are the following: the ease of opening our bank accounts. Yes, we've heard you, and we're doing something about it. 2, the establishment of our regional standard-setting body to ensure that we can also provide an appropriate oversight for our non-bank financial institutions, given our mandate for financial stability. It's very important. The Office of Financial Inclusion and Protection and Inclusion to give you, our customers, better financial protection from our financial institutions. And yes, we've heard you on that one as well. Financial literacy and inclusion strategy coming out of our inaugural financial inclusion survey we did in 2023. The launch of the Credit Bureau, which is now imminent and will provide access to credit. Everywhere a credit bureau has been established, credit has increased. And if we want to power our economies and we want to double the size of our economies, credit needs to increase. That's the idea. And finally, to expand our partial credit guarantee program, which is how we support our small businesses. In conclusion, you'll be pleased to know, our challenges are formidable, but so are our opportunities. I conclude with my oft-repeated declaration. As a region, we cannot change our history, nor can we change our geography, but together we can elevate our development trajectory through innovation and collective action. So let's do it. God bless you, and may God crown our efforts with tremendous success.